Well, thank you very much everyone for joining us for our 2020 Demo Day panel discussion. Today's discussion is going to be around the future of banking. I'm Fergus Gordon. I'm a Managing Director with Accenture, and I also lead our banking industry practice across what we call growth markets, which is Asia Pacific, Latin America, Middle East, and India. Today, we have three fantastic panelists who's going to share some very insightful and unique points of view around the future of banking, whether that be virtual banking or digital banking or incumbent banking. And what I'd like to do is just to have the presenters introduce themselves. So first off, Edwin, could you perhaps do an introduction of yourself?
Sure. Thank you very much, and a very warm welcome, everybody. My name is Edwin, and I work at Mox Bank, and I help with our corporate affairs, strategy, and partnership at Mox.
Thanks, Edwin. Philip, perhaps you can go next.
Sure. Hi, everyone. My name is Philip Chu. I'm a managing director at Grab Financial Group. And in Grab, I am in charge of new businesses, investments in new areas, as well as the current youngest verticals that we have currently, which would include insurance, wealth, and also our payments gateway business.
Thanks very much, Philip. Look forward to hearing from you. And Nike, perhaps if you could do the honors, thank you.
Sure. Hi everyone. I'm Nike Kong, Chief Information Officer of Hang Seng Bank, and I cover technology in Hang Seng, and we have various retail, commercial, and investment banking businesses, and we also cover Hang Seng indices as well as part of my role.
Great. Thank you very much, Nike. So I'm excited. I think we have a great mix of panelists from incumbent bank, a new virtual bank in Hong Kong, and then a big tech entrance into the financial services world. So I'm looking forward to having these three unique perspectives play out through the panel. So maybe we can get started with some of the questions, if that's okay. So I'll throw it open to the group, but 2020 has been a year of massive uncertainty. We've had COVID-19, there's been political tensions, it's been an election year in the US, we've got changing regulatory environment and new competition in many countries across Asia Pacific. So I'd like to ask the panel to start with, what's been the biggest challenge that you've had to overcome in 2020 and how have you gone about responding? Maybe we can start with Nike, if that's okay.
Certainly, there are a lot of what I call unprecedented things happen in the last year. But within that, probably something which is more prominent to us is COVID, I guess. And from the COVID perspective, how do we serve the customer within the bank? How do we help in terms of the community? And how do we take care of our colleagues so that they can carry on supporting the business? I guess first and foremost is obviously health and safety of our customer and our employees. And we're doing quite a lot in terms of on that front. In my role from a technology perspective, there is a lot going on in terms of COVID. And you guys will know there is a very sharp shift into the digital space. Digital volume has increased quite a lot. The branch people are going less into the branches, and as a result, we're seeing digital going up. Our mobile transaction volume has grown about 70% in the last 10 months. So that's quite a lot. And on our side, luckily, we plan quite well in terms of capacity, taking care of that. So that's okay. From a community perspective, we are doing what we need to do to help everyone in Hong Kong as best we can. We are a community bank in Hong Kong, so we're doing the $10,000 distribution earlier with the other banks and the government. We're doing the relief program to help our corporate customer and SME customer. And we're also doing we're doing a few things in terms of the community, like giving out computers to underprivileged children, etc. From an employee perspective, what we need to do, I guess, turning around after Chinese New Year is how do we enable the business, right? On that front, we're doing a lot from a technology perspective. Luckily, in 1 to 2 months, we get a lot of our colleagues who weren't able to work from home earlier to be able to work from home. We achieve about 85% very quickly in that space, and I guess we did quite a lot in helping. You imagine like a trader with many screens dealing dealer board in front of them, recording trading on the other side, and we managed to get them like working from home with some constraint, obviously, but that went on quite well. So I guess a lot has happened on that front from a banking and perspective in terms of helping a customer and helping our staff. But I guess compared to the hospital and the medical sector, that's tiny. What is happening out there is amazing, and these people are moving mountains to keep everyone healthy and safe.
Absolutely, couldn't agree with you more on that last piece. I thought it was interesting we touched on the need to scale your infrastructure given the jump up in mobile volumes and things like that. I was wondering if we turn over perhaps to one of the new entrants. So Mox, Edwin, how are you seeing things? Because there's a completely different view as a neobank without perhaps some of the need to scale or the legacy constraints that, say, Nike may face in his business. So I'd be interested to get your thoughts.
I think our challenge has been a little bit different. In many ways, it's probably similar to what a lot of the participants at the Accenture FinTech Innovation Lab has experienced. So our biggest challenge has really been building a bank from scratch in the last 18 months. And this is kind of given the external environment and also some of the challenges that we've seen in Hong Kong. And I think it really is testament to kind of the resilience. And I'd actually say more broadly to Hong Kong, because if you think about virtual banks, so Mox is one of the 8 virtual banks, but the fact that Hong Kong as a whole kind of being the first market in the region to really introduce virtual banks, and for 7 of them to kind of come to life this year. And then the last one is, from what I understand, very, very close in kind of that final stages of pilot testing. It's really, really encouraging. So for us, the challenge has been, not just building a bank from scratch, but how do you build a bank from scratch from home? And I think that's been a massive learning, which we ourselves have had to go through.
Thanks, Edwin. And then, Philip, being based in Singapore, would you characterize things as any different from a Singapore or from a Grab perspective?
Well, I think it's interesting. We being Grab, we actually live in a very fortunate part, having our headquarters in Singapore. It's one of the city-states that has things largely under control. But I think as I listen to both Nike and Edwin share their experiences, Grab has lived both sides through, because we are neither too small nor neither too big. And I think what is really important that we were concerned about at the beginning of COVID was, first of all, how interesting it is that we're going through this whole global pandemic, global experience. That's one part of how we thought about it, the possible changes that will come our way. And on the other side of it, we were also preparing for the worst, because it was very difficult to figure out what kind of second, third, fourth order effects that could happen, that could affect our businesses. And so to a large degree, some things came out as you would expect. For our transport, of course, it went down significantly in the beginning of the crisis. And of course, for food, it was as expected, accelerated up way higher. And our digital payments business, of course, went up also. I think it's of the same order as what Nike had said. For us, it's around 15 to 20%, depending on how you measure it. And also, as we saw that, we had to make sure that we were prepared for the worst possible storms. So there was a lot of cost cuttings that we had to go through, just to be more efficient, to be more prepared for various scenarios. And I think right now, given where we are in the crisis, we have visibility in where we will be likely in 2021 and 2022. And it's all about accelerating out of the crisis at the moment.
That's interesting, and that sort of leads me on to the next question here, which I think is we just spoke about the challenges, but perhaps with a vaccine on the horizon, or on the near horizon, hopefully, what are the opportunities that you see, coming out of the pandemic, and given the environment that we're working in at the moment? Maybe Philip, you can just touch on that to double click into there.
Sure. I think, with hindsight right now, we can see that basically the world has gone through a time machine experience. I think in terms of how we work with each other and how we control the way we manage our finances, manage our economic lives, it is possible for a part of our population to work digitally. And so when you have that, that means that there are certain parts of our businesses that have been accelerated way into the future. And so that means that, for instance, we're very much looking forward to our, hopefully, our ability to get the full digital bank license here in Singapore. And we're looking forward to executing on that starting in a few months from now, if we are so lucky as to get the approval. And also other parts of our businesses, like, for instance, our insurance business. It's largely a distribution business at the moment. And in the last month, we've gone from 1 million MAU to 2 million MAU to 3 million MAU just recently. And so the acceleration is very, very palpable, and I'm sure the other panelists are seeing that in their businesses too.
Great, thank you. Nike, from Hang Seng's perspective, how do you see what's the opportunity that you see in the market, particularly given rise with the neobanks and the competitive situation and the additional HKMA smart banking regulations coming in?
Maybe talk a little bit about what happened after COVID, and then I'll mention about the Hong Kong MA, the open banking initiative as well. I think those two are related. Certainly, mentioned earlier, everyone moving into digital a lot more flexibly. I guess there is a kind of new way of working, right? So COVID is probably mostly bad. But there are some new way of working. So like ourselves doing this conference, we would have been in a conference event in a hall, sitting on the stage with a lot of audiences in the past. Now everything is done remotely on video conferences. I had a virtual offsite last week with my regional group team. And usually there were people traveling in, right? And now we do three days of 15 hours, and then you just go and lunch and go home, like what you do in normal days. So there's certainly a new way of working in terms of more flexible. And as a result of that, what is happening out there with the Hong Kong MA open banking initiative, with the virtual bank coming in, I think it's a good thing from a customer perspective. So you have a choice now. After we go back to the new normal, then a customer can choose to go into branches that they want. They can call center, or they can go online, and people are a lot more flexible going online. The regulator are more flexible as well to allowing things to be done online with certain level of control that you need to put in. At the beginning, you will remember once COVID started, there were a lot of queries around security aspect on video conferences, right? So how secure these events are, or how secure that you are in terms of holding a meeting remotely on a conference call or even on an audio call. So, but now people are seeing kind of accepting this, and obviously there are things that are being done at the same time to protect the customer and protect your data as well. So I think it's moving on in a positive way in terms of giving customer a lot more choices than before.
Thanks, Nike. And then obviously, Edwin, Mox is now live. I think I saw your infographic where you've got up to thousands and thousands of people and customers now. How do you see the opportunity for Mox over the next 12 months?
Well, to be fair, it really builds on what Philip and Nike talked about, and it is that acceleration of the digitization that we're seeing. So to your point, and I think whether it's us or the industry, we are seeing a high level of adoption rate. So for us in our first month, we had about 35,000 customers, good inflow of deposits, people using banking differently, kind of building these sub accounts called goals, etc. So all of that is very, very encouraging. And if you look at kind of that fast forward trend, because historically Hong Kong, and it goes back a little bit to also kind of why virtual banks were built and the research that we kind of very initially started with, is while Hong Kong's product sophistication, particularly from a banking lens, is very developed, that digital lens is probably an area that can be improved. And I think that's what you're trying to see in that space. And then you also see people being a lot more comfortable with it. So historically, I think a lot of people would say cash is king in Hong Kong because people really need cash. Because at the end of the day, even taxis in Hong Kong, you still need cash. Tunnels, like some tunnels, you still need to pay with cash. And you almost challenge yourself, like, why? Like, or checks. Like, I don't know if anyone's experienced this, like with schools, but you know, the typical checks you still write might be to for school buses, etc. But again, like why? Like, and why go through that process? So there is that notion, and I think at least this is something that we really deeply believe in, and it really goes back to that kind of adoption. So if I'm honest, virtual banks right now, the earlier stat shared by the financial secretary was around 300,000 customers have it. So by and large, a lot of people in Hong Kong still don't have it, but we really think it will be a trend, kind of like your smartphone. So I don't know how many people use kind of like the first iPhone 1 or the second iPhones or something, but by the third or the fourth, like as long as there was like an aha or eureka moment where people just feel like, hey, I get what this virtual bank thing is all about. This helps me with this or that. Or likewise, you know, that transition from your usual taxi to Grab. Like as long as people get like, hey, I now understand the benefit it brings to me, then I think you're going to see that adoption continue to accelerate.
That's interesting.
Maybe just to add to that, I think it's a very positive thing from a customer perspective, because the virtual bank like Mox bring along to the industry a new challenge in terms of the customer experience, right? So as Edwin said, maybe people will be more willingly to open a lot more bank accounts. But certainly it drive us to do more as well as a incumbent bank, as the industry is just doing more in terms of helping the customer, particularly digitally.
Thanks, Mikey. I was just going to say, I'm sure Philip was excited by the fact that in Hong Kong you still have to pay with cash, and there's plenty of opportunity if the regulators allow you to digitise that processes. But I think it's interesting that we've been speaking to a number of players in the industry in financial services and non-financial services. And digitisation has been a big push for a relatively long time now in the industry. And there's been a real intent to digitise customer journeys and those sorts of things. But we've started to hear both from the players and from other industry participants around this concept of invisible banking that takes digitisation and plugs in data and puts that into ecosystems and platforms that create sort of embedded financial services across, across traditional and non-traditional players. I'd be interested to get your thoughts as to, one, is this something that you would agree with? You think this is a trend? And two, what do you have to get right to win in that environment, or winning, if that's the case? Maybe I can go back to you, Nike, if that's okay. From an incumbent perspective, what are your thoughts on that?
Sure. I think that's very real. I think in terms of what people talk about invisible banking 4.0, it is definitely coming. And in the past, people go into banks. Now people still go to bank in terms of like going into internet banking off the bank, or go into the bank's mobile app. In the future, what we see is that banking need to be in the customer's lifestyle. So it need to be available to how the customer want it, where they see it, how they want to do it, and where they want to do it. So it need to be integrated into the customer's lifestyle. And in the past, we say customer is king. And in our mind, I think we can customer experience is king in the future. So whoever can offer that integration into the individual's lifestyle will be the winner going forward. So from a bank's perspective, we probably need to start thinking about how do we create that ecosystem with our partner, not just doing banking with banking, but the ecosystem will open up, and therefore open banking, API, those become more important going forward.
Thanks. Phil, going over to perhaps the Grab perspective as a big tech coming more from a platform history, how do you think the embedded financial services plays into that, and how do you think about being successful in that environment?
Well, I would say that Nike's response, he could very well be a Grab person right there, because that is how we look at things, actually. And I think what's interesting for me is that when I hear invisible banking and so on, and there was a lot of effort that's been put into putting technology behind banking. And to me, I think in retrospect, it feels a little bit more like a tool looking for a problem. Because ultimately, what we want to do is to make people's lives easier. And the question really that's in front of us is where are people now? Where are people hanging out? Where are people interacting? Where are people finding what they need to do to run their normal lives every day? If you were creating a bank 200 years ago, you would go to where the ports are. You would go to where the rivers are meeting and where there's good transportation. You would go where there is an ability to have an accumulation of people in front of you. And you would then build edifices that project security and project safety. And you would create from there the idea of a financial intermediary that could make transactions between merchants and suppliers easy. You can create a lot of what we call the modern economy from that. And if you're looking for banking now, ultimately, let's just drop the terms, right? Ultimately, it's talking about one party making an agreement with another party and having that contractually enforced for some cash flow or some product flowing. That's literally what we're doing. And if you're able to do that in a scalable fashion across hundreds of millions of people, and those hundreds of millions of people, billions of people love to be there, that's where I think this idea of embedded finance, I would prefer just thinking of how do I enable the actors in this digital real estate to be able to transact reliably. We already have an instance of this in the world, China. You look over there, you see probably a 60% picture of that vision of the world. And I think it's us in the rest of the parts of the world, especially in Asia, ex-China, trying to find our way forward there, given our regulatory constraints, given our societal constraints, and what we're looking at. So Grab itself is looking at itself more as an economy. So I think increasingly you'll hear this term called Grab economy, but what is it really? It's just really an electronic connection of the folks who get services from within Grab. So we started with transport 8 years ago, and then we built food over the last 4 years. We started our journey in financial services a little bit more than 3 years, depending on how you count on it. We don't think our financial services journey will end in the next 3 to 4 years. It'll probably take us some time because, as we're all very aware on this panel, that industry is very deep and very wide. There are many, many things that can be done from within Grab. So we look upon invisible banking as truly an embodiment of how you bring financial services into a digital economy.
It's a very interesting answer. I really like the analogy around building a bank around the ports, say 200 years ago, and what that means today. So if you think about where people are gathering today, it is around these big platforms. How do you then, and maybe I can pass this one off to Edwin, how do you then think about acquiring the customers onto the platform to be able to activate the customers in terms of what, enabling them in their interactions?
Yeah, well, because to be fair, I mean, apart from that wonderful port analogy, I also really like the tools looking for a problem, because I can more share from our experience, and then we can kind of dive from there. But how we really kind of started the whole thing was I mean, before we did any form of coding, was just talk to customers. So we spoke to 2,000 plus customers, did deep ethnographic research, really around kind of pain points and jobs to be done. And so many of these are very obvious, like in terms of the general feedback from banks was really, banks in Hong Kong are good, like for sure, and they're safe. They kind of compared them to an elephant, but there were just some areas that they didn't quite help them on. Like for example, there was a lot of feedback around financial planning. Like they really, banks couldn't quite help them kind of plan for the future, and how could we kind of go about that. Then, I mean, some of the other pain points were also quite partly comical, partly obvious. But for example, there was always a feeling of, you get discounted for your loyalty. So kind of the longer you stayed with the bank, there was a bit of there was a feeling of the account opening process was a little bit challenging, particularly for non-locals. Like if you didn't have your permanent address in Hong Kong, that was a real pain point where they'd explain, like a lot of times it'd take, 45 minutes to go to branch. If you didn't have all your papers there, it'd take 2-3 minutes. So kind of that's really almost the genesis of where we all started off. And for us, it was all around, if we can redesign a bank from scratch, and that was our opportunity, how can we rethink all of these experiences to make sure that customers do enjoy the experience? I don't know who gave this quote, but I believe it is somewhere in there, but it was something along the lines of, a lot of people in the world probably prefer to go to their dentist than to go to a bank. And part of it goes back to that experience. Like, when was the last time you really thought, and sorry, like, to be fair, I've worked 15, 16 years in Standard Chartered, so I probably need to stop rambling on this point as well. But it's, when was the last time you had a really, really delightful banking experience that you'd be like really excited to share with friends and families? That's something that is different. And that really, even for ourselves, is something like that we challenge ourselves on, in terms of, what would it be that would make someone just proud to share that experience. And that in a way is what we've seen in other virtual banks, by the way, so across the world. So some examples we give is, at least when we did our research, was relatively few people would really go and say, I love ABC retail bank, whichever it might be. A lot of people might be, I love Apple, I love Google, etc. But if you look across the world, there are people that say, I love Mons, or I love N26, or I love, and they just like what they stand for. They like how they live experience. And that's kind of what we're going for. On the customer front, this one's so key as well. So back to your point around ecosystem. So when Standard Chartered took a step back, because obviously not all the banks went for virtual banking licenses. And it's also a very fair question, like, why did Standard Chartered go for a virtual bank license when others did not? At quite a high level from the teams, like there was this thinking that it was almost a philosophical question, like, do we have that right operating model to defend against potential disruptors? So say a Grab, or what we've seen like the Alibabas, the Tencents, the Ping Ons. And likewise, is there opportunity for us to kind of grow? Like if we wanted to grow, especially digitally in areas that were less represented, and I mean Standard Chartered, was there a way for us to do this? And very quickly, it kind of came to the conclusion that, if we had to do this, let's do this right. Let's build this from scratch and really learn from it. And actually, one of the really key themes, so we kind of have this thing on our walls, like the 10 big themes for us, was really around growing with our ecosystem partners. So we do not kind of walk alone, or whatever is the phrase that is, but it is about growing with ecosystem partners. And that's why the way Mox was structured was very deliberately, it was Standard Chartered in partnership with HKT and their parent PCCW, because they have the largest kind of market share on mobile phones, together with Trip.com. And again, that was really about that travel element.
Yeah, Edwin, I do agree with you. I think in terms of like the traditional banking processes and what happened in the past of the banking history, and there need to be a stronger focus on customer experience. Absolutely, and I think that's why what is happening in the industry is a positive thing. But in our mind, banking still is a people business. At the end of the day, it rely on people as well. And while we say that digital and an API and ecosystem is important, the trust, the relationship, and the engagement between bank and customer are equally important, or probably more important. Particularly when you're talking about growing your wealth, realizing your dream, So in many cases, you want to talk to an experienced financial advisor or banker to help you with that. And we do see that, right? In Hang Seng, we in Hong Kong for 80 plus years, and our customer bank with us for second or third generation. And that relationship, that engagement, certainly with the most advanced technology, you can't replace it as yet. So that we still believe that digital is not important, but it's digital with that human touch. The option to then call up the call center or go into the branch, talk to your RM, and those are like bringing the banking together to give the choices to the customer, as well as serving them well when they need to talk to somebody.
If I can briefly just pick up on Nike's point, because there are parts I entirely agree with you. So I do think even, when Sanchart thinks about it, it's really that human engagement, extremely important, but for what? So I agree on an advisory front, on wealth management, on investments front, but well, at least from our experiences, there are certainly some tasks where I think people are increasingly comfortable. So this is a story, but this is a 100% true story. So my story was, I have twin boys, and my twin boys, for some reason, on their 6th birthday, really, really wanted to open a bank account. Do not ask me why, but they just absolutely wanted to do this. And long story short, it ended up taking us an hour. And after the hour, I had one twin that was still comfortable to put their money with the bank. My other twin was crying because for some reason there was something in the experience where it felt off. So initially we asked him to, well, at least we came all the way here. You have your account open, at least put a little bit. So he did put a little bit, but then afterwards he cried because he just wanted to take it back out. And it was something to do with that experience. Because I mean, part of it was also, unfortunately the teller got the name of my twin wrong. So there's lots of little things where when I flip it around, I'm like, if Mox or any of the virtual banks can crack opening an account for kids, this would be brilliant. Like so where I'm challenging, it's more on the different task at hand. And I'm with you that human element absolutely critical, but I just don't think for every job.
And I would add that if you look at the questions about ecosystems and companies working in ecosystems, especially from financial services, we just had a prime example just last week. Citibank, Google. Think about that combination in the United States. And because I'm a loyal Google customer, I whipped up my phone, and within less than 1 minute, I had activated my Google Pay. And I authorized Google to read through my emails, to scan through all the receipts and all my photos, which in some ways is a little bit creepy, but I authorized them anyway. They went through it, and within a minute after that, they created virtual transactions in my Google Pay. Because it read through my email, it knew that I had gone to the Shangri-La Hotel and I paid $85 for some bubbly water, for some satay, and for some char kway teow in there. And not only did it do that, it went into my receipt and it looked at my SKUs. And it said, literally, char kway teow, literally, bubbly water, literally. So that level of understanding of my financial life on the part of the eco, as all of us as practitioners of financial service, are things that you wish that you could have. Because literally, I know if each one of us could sit in front of every single customer one-on-one, I know each one of our institutions can provide them the very, very best possible service and all of their issues in terms of what they need to live their digital lives and their financial lives properly. We have the ability to do that. What we're really talking about is a scale problem. How do we have intimacy with hundreds of millions of people without blowing up the cost to ourselves and being able to do that? And really, this is why we're all here right now in terms of talking about digital banks and digital financial services, because we all feel the opportunity of finally harnessing computing, harnessing different ways of working, to your point, Nike, in bringing together this very friendly way of experiencing financial services to the individual that does not ring false, rings very, very much like water in the middle of a desert.
Another challenge on the table. So I agree with all of that. And the young segment is certainly moving towards that, right? The convenience, the ease of doing something, and the integration with what a digital offering knows about yourself, and therefore customize the solution towards just you, right? I think that's amazing. That's kudos to the technology usage and AI and machine learning. But if you look back, there are still people who want to do simple transactions in the branches, talking to somebody. So we talk about 10K distribution earlier, and there's a lot of easy way to do it, right? Even on a browser or on an app. But there are still people who walk into the branches, the not so young ones, and some of the young ones as well, go in and fill in the form and get that passport printed and make sure that that 10,000 is there. So there are choices and there are preferences out there.
I think it's interesting. We've spoken about a couple of things here around trust, because we've spoken around banks being historically the trusted and secure place to put your money. And Edwin, Philip, as you were talking about the capability with Google, I think there's an implicit level of trust that Google brings around the ability to provide that service in conjunction with, say, someone like Citibank, in being able to look up, and one, make the right interpretation of the data and insights, but then also do that securely, right? And so then the third layer that comes into this is around how do you trust that ecosystem from a regulatory perspective? And so whether it's the Monetary Authority of Singapore or whether it's the HKMA in Hong Kong, these interplays of trust is essentially a very key component of the banking industry. And so I don't know, maybe Edwin, as you were thinking about Mox and building out the proposition, how did trust play into that proposition, or did it at all?
So critical. Trust, absolutely. Because to be honest, when we did our own research, so back to that 2,000 people, we literally did kind of blind test. And the short answer that we really got was most people would be quite comfortable taking a credit card offer or some loans from whatever was the cheapest source. But the challenge was really, if I had to deposit my savings, it was like $100,000, and you want that trust. I'm 100% with Nike on that trust and how you build it. So that's why you'll see very clearly, and maybe we'll need to change our wallpaper. We always go by Mox by Standard Chartered. Like that recognition, that confidence of Standard Chartered, 160 years in Hong Kong, that does lend incredible credibility. The only point I'd make though, and this goes a little bit to Nike's point, is I'm not 100% sure the age, well, for lack of a better thing right now, and this is a bit flippant, but for example, my mom definitely spends more time on her mobile phone than me. Like she plays Candy Crush, like, but also my point would also be, again, back to your traditional dial-in phone to the smartphones. So you're right. So there was a certain time when I remember so many people were still hung up on when my parent was probably the one that hung to the oldest, the Nokia phones or the flip phones or whatever it might be. But again, it goes back to, there has to be a reason. So that I completely agree. There has to be a reason why someone feels comfortable. Like there has to be a reason why, this is why I do it this way entirely digitally, or this is why I do this entirely digitally. And I think for us, it's almost to provide that right experience, absolutely right, in providing the trusted, that trust, which is very hard to build. And for us, it was all around, we have a new brand. So Mox, and when we did kind of the research, was a name that was relatively neutral, but how can you give people that sense of comfort? And that's why the Mox by Standard Chartered is honestly so critical.
Anything you'd added on the trust front, Philip, or Nike, before we move on?
I think that if you really boil down what financial services, to what you just said, Fergus, it boils down to trust intermediation between folks. So it's really key if you want to play in the space. For us, partner branding along with Grab is really important. You see it everywhere. I think there'll be more prominence of it, especially as we go deeper into financial services.
So why don't we, sorry, were you going to say something?
I do agree there about the trust as well. Yeah, trust is important, absolutely important. If you imagine you have your lifetime saving, your pension, where would you place this nowadays with the offers out there, right? And I guess most people will stay put it into a incumbent bank with many years of history and so on. It's not just the brand itself, is also the tradition, also the regulation, also the underlying makeup of the organization. The conduct, the culture, the way to manage risk as well, it's all come together and therefore build out that banking institution for so many years, going through so many troubles and are still there. And therefore those are the like affinity that you have, like in terms of yourself, your past generation, and that's I guess what we want to carry on building, certainly in Hang Seng with our customers.
Actually, Fergus, if I can interject before we switch topics, I want to be a little bit of a rebel here, because when we talk about trust, it's pretty easy to figure out trust given our financial structures and institutions that we have right now. There is a growing trend that we all see also every single day. As Bitcoin hits its new highs again, that there is a new generation of people that also look upon cryptocurrencies in a manner that is more similar to us perhaps years ago, even right now, looking at gold as a safe haven. For whatever reason, they have trust in crypto building upon itself as time goes on. And if you look at what the basic value added of blockchain is, you just take away the speculative side of things. Blockchain it goes back to the disintermediation and the creation of a different trust mechanism. So financial service always boils down to that, but there are different modalities of trust that we should really also keep an eye on. Certainly it's a minority right now. Certainly the central banks are on the side of traditional financial institutions, but who knows where that's going to go, but certainly interesting to watch.
And for me, the only point I kind of want to build on Phil as well was really twofold. I mean, back to the whole, in Hong Kong, right, in terms of the selectivity, but if you kind of fast forward and you look at, let's say, China, that level of comfort, especially with some of the digital players, is honestly a lot higher. And I think for us, it is for the industry, and I always see the banking industry as a whole. So it's kind of a bit blurry between, let's say, a conventional bank and a virtual bank, because at the end of the day, it's just a bank being regulated by the HKMA. And likewise, M&As when the time comes. And it is as an industry level, like how would we think about, where do we go next, and how would that next look like?
Great. I might move us on if that's okay. There's a very interesting topic to dive into, but I would like to get into a little bit more around innovation, FinTech innovation, and what's required to drive that forward into the future. From an Accenture perspective, we recently conducted a survey in Hong Kong of 128 multinational financial institutions and FinTech startups. And what that highlighted was there were sort of three key things that were in urgent need of attention if we were to accelerate innovation or FinTech innovation, at least in Hong Kong. The first one is broader adoption of FinTech solutions. The second is fostering a culture of entrepreneurialism, which was slightly interesting to me, given the historical nature of Hong Kong and perhaps Singapore as a hub of entrepreneurialism. And the third was then the development of FinTech talent. So I'd be interested to get your thoughts around, one, or at least starting by getting your thoughts around what's needed to drive the innovation, and what are the big challenges that you're seeing in driving that innovation in the financial services space in Asia Pacific today. Maybe we can start with Nike, if that's okay.
Sure. So we talked about earlier, how do we move into a digital space a little faster, quicker in terms of the competition. In Hang Seng, what we're trying to do is one of the area looking into is how do we create a innovation and entrepreneur culture in the organization. And we have a long history of legacy, some very, very good traditions in there. But some of the processes are not allowing us to move forward quickly. So within Hang Seng, we run an agile program for a couple of years now to move the organization forward. in terms of how do we deliver more rapidly on customer MVP and so on. And we have a internal structure called FinTech Incubator. So this is FinTech and Incubator. And what we're trying to do is promote an internal startup culture in the organization, giving media funding, going through Dragon's Stand, going through coaching and mentoring for these internal startups that our staff thought that they have an idea, they have a dream, and they feel that this proposition will work in the market and will work in banking as well. And therefore, we create an environment whereby they can like pitch for media funding to grow their own company internally. And we do other things like solutions showcase, bringing fintech in. We're doing events like open banking events, data hackathon, and so on. The number of things that we're trying to do in the program is not only just to create a solution which is useful in banking, but more importantly, how do we create that entrepreneur culture? How do we tell our colleagues that it's okay to make mistakes? It's okay to test and learn. As long as you understand that there is something that you need to change and then shift, and this is a mistake, and therefore learn from it. And how do you create that innovative and entrepreneur culture in the organization, so people come up with their idea, come up with their suggestion to move the organization forward. So that's what we're trying to do, and we're on the journey of doing that to bring the young ones along, and probably the not so young ones as well.
Okay, thanks. Philip, how would you describe, from your perspective, the need to drive things forward from an innovation perspective and the challenges to that?
Yeah, I think perhaps uniquely with Grab, we don't necessarily have a lack of drive and energy for innovation, because it's almost by definition with the people that we currently have. And I think in terms of the distribution of people who have joined Grab, I think probably around 30 to 40% are between 0 and 2 years in with us. And then probably the ones who are 7 years, 6 to 7 years and above, it's probably less than 5%. So, it's a little bit of a self-selective society of people. So from the get-go, it's all about the governance of which ideas get tested for second and third. And I think on the corporate level, the important thing for us is to get into as much of people's lives, broadening the ecosystem as much as possible, and then just unleashing the thousands and thousands of people with some of the best tech platforms out there to be able to then experiment through the eco at the same time. So to us, it's a little bit of at the exact level, it's about governing this mass of people internally who are trying to innovate, and also being responsible to the folks who provided us capital at the same time. So perhaps it's a little bit different, because we are both an elephant and also an elephant that's expected to dance at the same time. And I think we do pretty good pirouettes right now.
Very good. I'm looking forward to seeing that in Singapore if you get your digital licenses. Edwin, from an innovation perspective at Mox, what do you see as important and what do you see as the challenges?
I think we echo the three challenges you've raised in your study. So when we built the bank, I think while there are a lot of very good programs in schools around fintechs and innovations, and certainly kind of business schools covering this, we did have some challenges in our kind of finding the right people with the right experience. So while I think Hong Kong is incredibly rich in terms of people with banking experience and banking knowledge, and a lot of bankers, there have just been fewer people who've really built a bank from scratch. And that's why, at least on our side, particularly for very specific roles, whether it's around kind of cybersecurity or just around cloud or whatever it might be, we've had to find resources globally. So I do think as we consider this, it really is maybe encouraging more of the, so we've been told that there are about 260,000 bankers in Hong Kong. Like, just, I mean, for people who do want to think about, the next 5 years, the next 10 years, the next 20 years, how would you build out those skill sets to really embrace, this development of the economy?
I'm glad you brought up the talent point, Edwin, because I was going to say in Hong Kong specifically, and I can see down not very far away in Singapore and the other countries where these virtual banks have been rolling out, the war for talent with the right expertise in how to do product service design, how to think about the end-to-end customer journeys, how to run agile organizations is just going to continue to heat up. And so I think that was very interesting for you to touch on. Is there something that you're thinking about in terms of that either the regulators or the governments could do that could help foster the availability of that talent? And I'll go back quickly to Edwin on that, and then I'm maybe interested in the views of Philip and Nike.
I mean, on our side, I mean, to be fair, part of it actually goes back to the partner ecosystem. So we did leverage on partners in terms of how we could build this together. The other point, I'll have to have a bit more think in terms of, Hong Kong Inc., what can be done. Because even for a lot of, I guess we can say expats who's come to Hong Kong, I mean, it goes back almost to your first question. It has been incredibly, incredibly challenging, kind of given the external situations. So for example, various colleagues where they haven't been home for, I mean, God knows how long. And part of it is just, it does add to that stress. I mean, and so there's so many people's stories, even as we were building this bank, for which they've had to face.
I might cut you off there if that's okay, Edwin. And just, I know we're going to run out of time soon. I just want to get a quick view from Philip and Nike, and then we can run a final question. So, Philip, any view on the talent piece?
Yeah, I think it's super challenging for us in Singapore, especially with regards to more incursion of Chinese tech companies creating their base here locally in Singapore, and they're starting to take away some of the folks who would have ordinarily considered us. And so the competition is there, but I think we do have a really bright future that we can sell to the folks who do eventually join us. And I think that the important thing about talent also is it's a matter of how we run the institution itself. I think if the institution runs on the basis primarily of first principles, if you're in banking, you very well know economics, you very well know finance. If you don't know, you're a smart person. In 6 months, you should be 5 times smarter than you were in the beginning of 6 months. In a year, you should be 10 times smarter. And if you do that within the space of 2, 3, 4, 5 years, you would build up your cadre of people that you would need also. So there's an element of how you run the bank versus bringing the people from the outside also.
Got it. Naki? Maybe
yeah, certainly a serious challenge. As Edwin said, people who understand banking and tech together, that combination is difficult. And with the market development, retention of talent is difficult as well. We're trying to work with like the universities, with Hong Kong MA to these FinTech management trainee and so on. But the supply is quite limited, so we need to continue to grow that. There's a lot going on, and obviously tech is moving rapidly forward. The emerging technology, in order to keep up with pace, the tech guys need to spend a lot of time doing the tech stuff, right? And then at the same time, you need to learn about banking as well. That's a real challenge.
Okay, thank you. So I think we've got about 2 minutes left. Maybe I'll just ask one very short, sharp question, which is if you could make one bold prediction for 2021, what would it be in terms of the future of banking? So maybe Philip, we can start with you if that's okay.
So for 2021, I think as we see COVID-19's effects die down, especially towards the later part of 2021, I think what would be interesting is that, to me, the possibilities in M&A and in regulatory changes could actually accelerate into 2021. So I think 2021 is a year to watch and to see many more changes coming, especially for us in financial technology.
Good. Nike?
I think the bank will start working with the non-bank very actively next year. So the corporate and the banks will come together. We talk about the ecosystem, the API. I think there will be significant development on that front. There will be some failures. There will be some that does not work. But there will be a good bunch that create new proposition, which is benefiting the community and the customers.
Great. And then Edwin, from a Mox perspective or from your perspective?
This is more a hope than a prediction, but that rapid acceleration of virtual bank adoption in Hong Kong.
Okay. Well, with that, I'll make a bold prediction that there'll be a FinTech pro. Thank you, Philip from Edwin from Mox and Nike from Hang Seng. Really appreciate the conversation today. Thank you very much.
Thank you, Fergus.